Hi everyone, welcome back to our second session. So in this session, we're going to be looking into candlesticks. So we are going to have two segments. So two sessions on candlesticks. So this first one, I'm going to be looking into introduction to candlesticks, and basically we're going to be describing or discussing the anatomy of candlesticks, that is the candlestick structure, so that we want to see like what makes a candlestick and what is a candlestick, right? So we have many types of what you can see on my screen right now. It's called a market chart. So market chart, there are different types of charts. We have the bar chart, we have the line chart, we have the candlestick chart, and many other charts. You can see here the hollow candles in the area baseline. I don't know most of these, like the hollow, the area, and blah blah. I don't even use this. Even the line in the bar, I know, but I don't use them. I only use the candles. So the candlestick chart, it's basically, it shows the movement of the market, right? So this is what we are going to be using in our trading. So it's important that you get to understand how these candlesticks are formed, how they move, and how we can use them to end our trades and to predict the movement of the market. So let's start by defining candlesticks, right? So candlestick. We have the candlestick charts. So basically, candlestick. Yeah, this is wrong. Candlestick. Basically, candlestick charts. They are special charts that that are used to describe price movements. Movements in the market, right? So the candlesticks, they are very important because they are used to describe price movement in the market. So by market, I'm simply referring to the currency market. We can talk about currencies here, or we can talk about security. So security, you can think of stocks. When we mention security, then currencies. I want to believe that you already have an idea. So currencies, we have pairs, right? We trade pairs against each other. Let's say we have for this chart, we have Euro USD. As you can see, let's reduce this to 20. Okay, yeah, perfect. We have this is the chart pair for chart for Euro USD. So we are trading the euro against the US dollar. So if we buy this market, we're expecting the euro to go up in the USD to go down. So yeah, these are currencies. And we also have other things like indices, like NASDAQ, that the basically it will be a combination of a number of companies, and they measure the performance of those companies. Let's say we have Facebook, Instagram, WhatsApp, and Microsoft under NASDAQ. So if overall, if all of them, they are performing well, the market will be moving to the upside. If they are not performing well overall, the market will be moving down. So yeah, candlesticks, they are very important because they describe or give us an idea of how the price is moving in the global market. So one thing that you need to understand is the formation of candlesticks. So how are candlesticks formed, right? They are formed from a display of the opening or the closing of price of currencies or security for a specific period. So how is it possible? Let's say we have this is how our candlesticks are formed, right? Let's use the conventional colors like this. This is better. Okay, so we are this what you can see right now. This is the body of a candlestick, right? So what you see right now, this is the body. This is the body. This is the body. Let's change this to blue. Let's reduce this to 12 maybe. Yeah. This is the body, right? This is the body of the market. Then we have the other thing that is here. This top end, we call this shoulder, market shoulder. We call these shoulders. So we have this is a shoulder, right? So let's just label. So this is this is shoulders, market shoulder, candlestick shoulders rather. So this is a shoulder, this is the body. Then you are going to realize that some of the markets, some of the candlestick, if you open your charts, you are going to observe something like this from your candlesticks, right? You're going to observe something like this. Let's change this to gray. Let's make it a little bit bolder. Yeah, you're going to observe something like this, right? So if you see this, we call this a shadow. Some they call it a wick. It shows a rejection in the market, which means that there is a strong fight that is happening between the participants of the market, right? So these are called wicks or shadows. So let me just label them. So this is what? This is a shadow. This is a shadow right here. Shadow, or some they call them what? Wicks, right? Yeah. So these are shadow or wicks, right? Shadow or wicks in this one. So there is also one thing that you need to understand as we are still describing the structure of the candlesticks. We have the opening in the closing of the market. We have two participants in the market, right? We have two participants in the Forex market. Let's just do it like this. So one, we have the buyers. So the buyers, they are responsible for the upward movement. So if the buyers have enough strength in the market, they push the market to the upside. But they are often referred to as bulls, right? We will be using this term more often. And we have the sellers in the market. So the sellers, they are referred as bears. These are the trading terms that we will be using. So we have two participants in the market that are responsible for how these candlesticks are formed. So let's say the buyers are in control of the market. You are going to notice something. Let's say the buyers are responsible for what? For this candlestick. We have something that I want to mention before I start to explain how these are formed. We have this part, we have the opening and closing price. So if the bulls are responsible for for this candlestick, this is going to be our opening price. So opening price, and if the sellers, this will be our opening price, and this will be our closing price. This one, the upper shoulder, this is going to be the closing of the market. Then the top of the week, we call this a high. This is a high. Let's change this to red to make it distinct. So this is a high. This one, the top of the week, this is a high. Then the bottom is going to be a low, right? So this is for if the buyers are responsible for this candlestick. So if the sellers are now responsible for this candlestick, right, the opening price is going to be this opening price is going to be at the top, then the closing price is going to be at the bottom. Then the board remains the same, the shoulders remain the same, the high remains the same, the low remains the same. So this is how it will be formed. So let's say this is for what overall, this is for bulls. This is for bulls. So it's a bullish candlestick. So this is going to be a bullish candlestick. Let's change this to blue. Okay, perfect. So this is a bullish candlestick. So for a bearish candlestick now, on the other hand, we are going to have the market opening, let's say around here, right? Then it will start to move downwards, right? Like this. Let's change this to red so it becomes distinct like this. So as the market pushes down like this, a board is being formed. So if there's a rejection like this, so if it moves to, let's say, this point right here, let's mark it like this. Let's say from here to here, this is where it is reached, but still will the candlestick hasn't closed yet. So if it is being rejected, then it moves up. We're going to observe a shadow being formed. So this is going to be our wick. This is going to be our wick, right? From the shoulder to the lowest point. So let's say on the other hand, when the market opened around this level, it had moved. Let's say this is going to be our opening price, right here. This is going to be our opening price. Let's say from let's just extend it a little bit further like this. Let's say we have the market opening from here, then it pushes to the upside. We're going to observe this as a green candlestick at first, like this. Then it reaches the highest point, right? Then if there is a rejection from the sellers, then they outcompete the buyers we'll see the market pushing to the downside. So is the market is being rejected, or the sellers are rejecting the buyers, we see a shadow being what? Being formed right here. Then it will change its color to what? To red, right? Then it start to push to the downside. So is it pushing to the downside? The same concept applies. Let's say it reaches a certain point, let's say this one, right? Then this is the what? The lowest point. Then there's rejection. The market moves all the way up. We're going to see another shadow being what? Being formed. So this is going to be a wick, right? Or a shadow rather. So for a bearish candlestick, we are going to have, let's say this is going to be our what? Our shadow, a wick rather, a wick, and the top part is the high, market high, right? Then we are going to have this pattern is going to be our wick also, right? So this is a wick. Then this will form our what? Our lowest point. So it will be a what? A low, like this. Then we are going to have our what? Our opening price. So this is our opening price right here. This is our opening price right here. So we are going to say opening price, opening price. Then this is our opening price. Then we are also going to have our closing price. So this is our closing price here. This is our closing price right here. So let's just label this and say this is our closing price. Closing price. So basically, if you want to take a look at this, you realize that how the bullish candlestick is formed and how the bearish candlestick is formed is different. The only difference there is the opening price and the closing price. If we're in a bullish market, the opening price is going to be at the bottom, then the closing price is going to be at the top, which means the market is pushing to the upside. So let's take for example, if the next candlestick is being formed here, right? This is the closing price. So the next candlestick is going to be formed from the opening price of this. The opening price is going to be the closing price of the previous candlestick. So we have the same scenario. The market might push all the way down. So it pushes all the way down. Let's say it is full momentum like this, no wicks, no whatever. So this is going to be our opening price. This is going to be our closing price. This is going to be our low, and this is going to be our high, right? So let's just add some labels to this, like this. So this is going to be what? This is our opening. This is going to be our closing. So let's just move this here so that we don't confuse anyone. So this will be our closing price. Then closing price, then this is going to be our low. It's going to be our just low, no wicks there. So it will be what? A low. So let's just put it here. Then we are going to have this is our high. This is going to be our high. This is going to be our high. This is going to be our high. So this is how the candlestick charts are formed. So if the next candlestick is going to be formed here and it's a bearish candlestick, we will see the same concept. If the shadows are formed, you see the market exceeding to a certain point, then it closes to a different point. So yeah, basically this is the structure of the candlesticks. And the other thing that you need to keep in mind, if the candlestick has a full body without wicks, it shows that it is more momentum, it has more power in the market. Then if the candlestick has wicks, it shows more rejections, which implies rather that it is low momentum. So yeah, this is the basic information of how candlesticks are formed, the basic structure of candlesticks. So in our next session, we're going to be discussing momentum in more details, and we'll be looking into candlestick patterns, and I'm going to be discussing it in a different way than what most people teach, for the sake of simplicity. And I think and I want to believe that it will help a lot of people in their trading journey. So this is it for now. So I just hope you are going to go through this. I'll be uploading this video on YouTube, so you can just go there, view it as many times as possible. If you have a question, just feel free to DM me, and I'll be helping you. So cheers guys, see you later.